Africa's insurance penetration rate sits at around 3%. That's significantly lower than the global average of 7%, indicating opportunity. But in the current economic environment, expanding the market could be challenging. So this is Insights from Africa. I'm Bronwyn Seaborn, and on this episode, we discuss if the future of insurance is still in Africa. Well, prior to 2020, Africa was ripe for the picking by insurers. Sector leaders were enticed by relatively high GDP growth, a rapidly expanding population, and low insurance penetration. But the pandemic hit and fortunes changed. Growth rates have come under pressure, and while a large uninsured population still exists, the ability of consumers to afford products has eroded due to sustained high interest rates, among other things. That's not to mention the climate catastrophes that are also shaping the thinking around risk. So it's a complex and interesting time to view Africa through the lens of insurance. And joining me now to do that is Katlego Thaba, Associate Director of Actuarial Insurance Solutions at Deloitte. Katlego, thanks so much for your time today.
Bronwyn, thank you for having me. It's only a pleasure.
So Deloitte looks through all the numbers, compiles all these questionnaires and things to put some data together on insurance in Africa. And that's why you're so well placed to chat to us today as we unpack the situation. So right at the top, Is Africa still the next frontier for insurers? Is there still a lot of possibility, a lot of hope around the sector? Or did COVID really scupper things for us?
That's a very good question, and thank you for that, Bronwyn. I mean, I'm very passionate about insurance in Africa. I actually traveled the African continent. I was a couple of months ago in Kenya, where I do a lot of work for clients in Kenya, in Uganda, and in Tanzania, but also traveling here in Southern Africa, doing some work in West Africa. And what you've highlighted very quickly just gave a very good snapshot of what is going on from an African insurance landscape standpoint, because there's a comparative view when you look at the African insurance landscape and Africa economically relative to what's happening globally. Although we have been seeing muted levels of GDP growth, if you look at South Africa, very pedestrian at less than 1% levels, you are still seeing comparatively the African continent in its entirety being much more competitive than developed countries. Yes, we might not compete at the same level as Eastern, even Southern Asia, but it's highly competitive from that standpoint. But even as you look at what is happening in Africa, where we are from an insurance standpoint, the opportunities that exist, and we can delve into that, but very low and fairly low insurance penetration levels when you look at markets like East and West compared to what you're seeing in South Africa, double-digit levels of insurance penetration, and maybe even comparably, competitive levels in a place like Namibia. But across the African continent, there's still a lot more that is untapped as far as insurance penetration is concerned. And so that presents a lot of opportunity. COVID came, disrupted a lot of things, particularly in terms of implications around buying insurance, how much we've had in pressure, subsequently even the Russia-Ukraine fallout, implications on inflation, implications on, levels of, for example, you get Nigeria and you look at the impact on the currency devaluation there. And all of that has applied a lot of pressure as far as increased penetration is concerned. But there's a lot of opportunity. We've been seeing a rebound, especially when you look at the South African climate in relation to, firstly, we've seen resilience following the COVID pandemic, coming into and seeing some of the storms like in KZN. But now we are seeing, a return to being primed as an insurance industry in Africa to attract not just investments within the continent, but beyond the continent.
I don't think people fully understand just how much of a role insurance can play in economic prosperity. Won't you unpack for that kind of relationship for us? Because I really don't think that there's this nuanced understanding of what an insured population really means for a country's economy.
I like that. I mean, one of the things, as you're asking me that question, I just mentioned I traveled to Kenya and Nairobi recently. I was very concerned. I'm speaking to my colleagues in Deloitte in Nairobi, and I'm asking them, there were the Nairobi floods just recently, last year, and asking how was the impact felt by the insurance industry. And it was surprising the response they gave me, saying, there was a massive impact in terms of the floods. But actually, because of low insurance levels, the insurance industry wasn't as hit as hard as what you would expect. But you compare that, for example, you look at the fires in Los Angeles, in California, and you see very large damages, but also the insurance industry absorbing a large proportion of those losses. Yes, it still can grow, significantly so, but if you look at $25–30 billion in losses being absorbed, you can see the value. So that is just to bring a story and an illustration of, firstly, what increases in levels of coverage can do, because we are exposed as individuals, as corporations, as organizations, and as government to events that can be detrimental, whether it is storms, whether it is catastrophe events, whether it is weather events, but also normal day-to-day activities. Not having my car insured can set me back quite significantly financially. And when entities and organizations understand that they are covered from an insurance standpoint, it encourages economic activity. For example, instead of being and suffering from business interruption, which we saw during COVID times, entities that had insurance could leverage and benefit from payouts from their insurance policies. But over and above that, even just from life protection focus, or from a perspective of protecting the value of a life, where life insurance provides economic means for families to continue on a path where even if they lose a breadwinner, they can be supplied for. So there's a lot of value that insurance can play, but I think education is necessary. And that's part of how we can broaden, from an inclusion standpoint, access to insurance for the African continent.
We're going to get into it in a little bit, but yes, insurance always a grudge purchase for most people, and us trying to get around that. But before we get there, penetration is low. Penetration rates in Africa sitting at around 3%, and that's probably being a little bit generous. Global average is around 7%.
That's right.
Why is it so low?
So it's a number of reasons, right? So, but ultimately, it is around perceptions. It's about where the industry is, the markets are. So I've already mentioned, in South Africa, actually, our penetration level compares favorably with what you're seeing as the global norms, right? In fact, if you look at the global average, we are significantly above the global average. You look at a place like Namibia. But then you look at places like East Africa and you look at West Africa, and I've had conversations on the ground around what is really happening and why is there a struggle. So for example, one contrast just to highlight, when you look at South Africa, the life insurance industry is a lot larger than the non-life or general insurance industry. But when you go up north, you're seeing the reverse, where in East Africa, you're seeing a much larger non-life insurance industry or short-term insurance industry, already giving indicators around where people's preferences and views are as far as risk is concerned. And what we are seeing as successes in those areas and in those regions, in East and West, is utilization of alternative means to deliver solutions. Certain things like banking are still very much low in as far as adoption is concerned on the African continent. And so if your primary way of doing insurance is only in those traditional means versus mobile money solutions, where we are seeing those gaining successes in regions like East Africa and West Africa, then you start being limited. And so we see opportunities as far as growth is concerned in other areas on the African continent being driven by innovative solutions where insurance is delivered differently to what has traditionally happened. And what has been the other case or another factor is just the economy. We do need the economies of our regions to grow, because ultimately, as you said, many people still perceive insurance as a grudge purchase. If interest rates hike, the first thing I throw out typically will be my insurance policy. But when we demonstrate through education, partnerships between the private sector and regulators, for example, to empower and educate the market, understanding the value of insurance, that will start trotting us along and taking us along in the right direction to improve penetration levels.
That all happening on the one hand, and we've raised this risk of climate change that comes into it. You mentioned the floods in Kenya as an example. And the feeling among some insurers is that we become more risk averse as a result of these climate events. Do you think that it's spurring innovation though? Because this is just how the world is as we move forward. Climate risk is there. It's part of how we are moving into the future. These weather-related catastrophes are just going to be more and more forefront. And so really, I know the initial response by insurers was, we want to back away, we're now not going to insure, we're going to reassess. Do you think we're moving now into a space where there's becoming, where innovation is now coming to the fore to deal with these kinds of risks?
Very good question. I would say firstly, it is a choice, right? But in fact, it should be a challenge to us as an insurance industry to adopt and choose to go the innovation route, because insurers are presented with a challenge to say, you know what, they are risk carriers, they are experts at risk management, and one of the easiest ways to deal with risk is to avoid it, right? When you go into areas where, like KZN, that have seen and shown higher propensity to floods in recent years, it is easy to say, I'm going to underwrite and exclude KZN as a region. But historically, the role of insurance has been about risk pooling. Yes, KZN might suffer in relation to its exposure to these climate catastrophes, but maybe Northern Cape not as much, maybe Northwest not as much. And so you are balancing out and having a pool that enables that risk sharing to be facilitated. And that says there are opportunities for insurers to choose, Bronwyn, to adopt a mindset of innovating around the challenges that exist, innovating towards supporting activities that drive the green transition versus just saying, I'm going to focus on where I am and look at my margins and my profitability and exclude anything that tries to eat into that. It is about redefining the role of insurers from just being protection oriented and focused to saying, how can we support creating economies and industries that are sustainable beyond just protecting against risk. And that's really where we find ourselves as an industry. We can choose to be leading, to be enablers as far as the green transition is concerned, as far as coming up with proactive ways of managing climate catastrophes.
Katlego, on that note, let's leave it there. Thank you so much for your time today. Katlego Thaba is Associate Director of Actuarial Insurance Solutions at Deloitte. We're going to take a quick break, but when we come back, my next guest says that insurance is quickly transitioning from a grudge purchase to a critical enabler of economic development. We'll get into the detail of that on the other side of this, so don't go anywhere.